the South African Reserve Bank's Monetary Policy Committee this past week taking the decision to raise the repo rate by 75 basis points, taking it up to 6.25%. During that announcement, Reserve Bank Governor Lesitsha Kganyago said that the cost of living, the high petrol prices induced by the Russia and Ukraine war, and slow recovery from the COVID-19 pandemic all contributed to the inflation increase. So let's make sense of what this means for you and I, practically speaking. Bring in now Gerald I beg your pardon, it's Mwandiambira, who joins us now via our video link. He's the managing partner at Sugar Creek Wealth. Gerald, thanks very much indeed for your time. It's great to have you on the program. Apologies for that. I imagine part of the questions that still remain, even in the lead up to the announcement itself, is around whether or not increasing the repo rate is indeed the best way to respond to inflation. Where do you stand in that debate?
Look, monetary policy is one of the measures which the Reserve Bank does use to try and rein in inflation, but it is a double-edged sword because by raising the repo rate, it impacts on every South African directly, especially if you have any form of credit or loan. So, for example, just by increasing this by 75 basis points this week, if you have a bond of 500,000, your bond has gone up by 244 Rand. If it's R1 million, that's an extra 488 Rand on your monthly bond. And remember, 500 Rand on a bond means it's 500 Rand you need to find, which last month you were not spending on your bond. It gets if you've got personal credit cards and bank loans, which operate at much higher interest rates. So obviously, this puts more strain on a consumer who's already feeling the weight of an economy that's been very sluggish. And for those who are even self-employed, it's even a triple-edged sword because they're also grappling with power. So you have a scenario where you can't earn and the cost of living keeps running away from you. So it is going to have a detrimental effect on household budgets. Yeah,
the IMF agrees that things are tough, but they're also warning that things will get tougher. In fact, from this announcement, we heard that 2 out of the 5 members of the MPC actually wanted a 100 basis point increase. To what extent do you reckon that's a sign of things to come?
Yes, I think I expected 100%, or rather 100 basis points, which is a percentage increase. And I think it's going to come in the next quarter in any case. What it simply means is that consumers simply need to keep tightening their belts. We can gain solace from the point that still are at interest rates that are lower than pre-COVID pandemic levels. But the economy was performing much better pre-COVID. So we're reaching a scenario where interest rates are coming back to where they were before COVID, but we're not earning as much and the economy is not doing as well as it was at that point. Certain sectors of the economy have done well, and property is one of them. But definitely what we're going to see in the next coming months will test a lot of South Africans in terms of their will and resolve in managing their personal finances.
Yeah, speaking about property, we know when the repo rate was, slashed in response to COVID-19, many first-time buyers could finally afford to buy houses and so came onto the market. But the increase of this repo rate may very well push some of those people out. What impact do you reckon this is going to have on the property market as a whole?
I think on the property market, we still need another 100 basis points before we tip the edge. Remember, at the moment, it's still cheaper to own a home than to rent. And as long as that remains the equation, it's still a buyer's market. So I think buyers will still be active on the property market. However, should we see another 100 basis points, another percentage and a half increase in the repo rate, then definitely it switches back to being cheaper to rent than to own. But at the moment, it's still very much a buyer's market. People are still, very much active, especially in the homes which are sub 1 million to 1.5 million. There's a lot of activity. The demand is outstripping supply. It's only on the more expensive homes where people are really feeling the pressure because, for example, a 75 basis point increase on a bond of 3 million is 1,200 Rand increase on the bond.
Yeah, certainly nothing to be scoffed at. In this ongoing discussion, there's also been solutions being bandied about. One of them includes perhaps the Reserve Bank considering changing its inflation target so that we have a bit more leverage when it comes to bringing down inflation from that upper bound. What are some of perhaps the unintended consequences of that?
Look, I think it's a valid point. The inflation basket is really what should be re-looked at, because the real inflation we all experience is far above what the target is. So I think the target needs to reflect more in terms of what most South Africans are feeling, and therefore then it'll be a much better barometer and tool to use to manage inflation. At the moment, the inflation target is below 6% or around 6%. It's very low. Everyone will tell you things have gone up by 10, 15%. And we need an inflation target which is more in tune and in touch with what consumers are experiencing. Fuel price, for example, has not gone up by as little as the inflation targeting is indicating. So I think you are right. I think the calls would get louder for us to sharpen our pencil in terms of setting a more realistic inflation target, or at least reevaluating our inflation basket weightings.
Yeah. In the midst of all of this, of course, is around what government should have done, what it should do, and perhaps whether or not there's anything else that ought to be done by the state. Part of what you mentioned already is, unlike pre-COVID-19 times, the economy is really just in dire straits. The load shedding, of course, isn't helping. I guess in that world, the question becomes, what are some of the immediate interventions that could come from the state?
Look, I think the government is doing all it can, to be quite honest, because the whole world is almost at the edge of a global recession. I think the whole Russia-Ukraine scenario, we're going into winter in the Europe, and the energy prices there have skyrocketed. So I think we are in a situation where we're in a high inflationary environment globally. So we're not unique to that, but I think we are unique in terms of how our government has been slow to adapt and sometimes move on things which affect ordinary South Africans. So I think, government is doing its best, but, the energy policy is not helping. And, we need to find different opinions and different ideas, because we seem to keep doing the same things we've done before which have failed to try and remedy the situation. We need new thought leadership. We need new economic theory and ideas to push this economy out of where we are now, and entrepreneurship and self-employment.
Could more be done to improve investment in this country? Difficult question to ask, of course, because many will tell you that investors, if anything, are being scared away by our current energy crisis.
Well, the energy crisis does not attract any investors, but most investors have got problems at home. So Europe, UK, America, Japan, they've all got their own issues domestically right now, so that their money is not flying out. We need to stimulate domestic savings so that we reduce our reliance on foreign direct investment. And that goes back to the age-old theory of how can we get South Africans to save and invest in South Africa instead of living in South Africa and just simply being consumers. So it's a whole mind shift we need to try and encourage. But I think the foundation of it all will be around how we can create more entrepreneurship and self-employment opportunities, right, so that we have less reliance on foreign direct investment.
Yeah, I mean, before we speak about savings, we need to speak about disposable income. Before we speak about disposable income, we need to talk about whether or not people have jobs. Before that, we need to also ask questions about how sustainable those jobs are. And again, that brings us back to the conversation around the role of the state in trying to ameliorate this looming disaster.
Well, look, Ayanda, I think, you mentioned the word JOB. You need a job to survive. You can create your own opportunity. I think there's too many of us who are holding CVs expecting a Hail Mary from somewhere to give you a job. We need to get out of that mindset that someone needs to employ you. We need people who can start employing themselves and hopefully employing 2 or 3 other South Africans. And that's all we need. Small, don't need big corporations offering thousands of jobs. We just need one person employing 3 people, and suddenly we have a scenario. We're eating into unemployment, we're creating wealth, and we're actually starting to behave and create that investment. The amount we consume domestically in South Africa is more than sufficient to kickstart and stimulate a domestic economy that's built around entrepreneurship. But obviously, there's also a lot of red tape, government intervention of starting a business and simply doing business in South Africa.
Interesting take. While our network still holds, let me ask my final question to you. Obviously, we are hoping to get to a point where the repo rate will finally go down because of our inflation responding to this intervention. At what point do you reckon the rate should be? Let me rephrase that question. what do you reckon the rate should be before we can start anticipating a cut from the Reserve Bank?
If I can do that, you can call me Nostradamus. But I liked the rate where it was a year ago. I think, realistically, we might be looking at another 150, 200 stability. Obviously, we need to see the economy responding, and then we can start hoping for the repo rate to start inching its way back down. At a buffer of another 100 basis points still in there coming out there.
Gerald Mwandiambira, thanks very much indeed for speaking to us. Really do appreciate your insights this Sunday morning. Gerald is the managing director, or managing partner, I should say, at Sugar Creek Wealth. Once again, thanks very much indeed.